Hello everyone and welcome to TTT Markets. I am Fotis Papatheophanos and today we are going to discuss why most traders fail prop firm challenges even with a solid strategy. So this is something that frustrates many traders. Why do most traders fail prop firm challenges even when their strategy is actually solid? Because the truth is, most failures are not caused by bad analysis. They are caused by bad behavior under rules. And in this video, I will show you exactly what that means using real chart logic, real risk examples, and what prop firms are actually testing. So let me go and open a pound-yen chart. We will use this as our example today. But first, before I move to the examples, I wish to share something important. A prop firm challenge is not a trading competition. It is a risk management filter. They are not asking, can this trader predict where pound yen moves next? No. Instead, they are asking, can this trader survive without blowing up capital? That's a completely different skill. And this is where most traders already start failing before they even place a trade. Now let's look at pound yen as an example. Assume a trader has a perfectly reasonable strategy. Pullbacks into trend, and this is when you take a trade. Structure support and resistance, you can confirm with a moving average or even an RSI. You are going for a 2-to-1 reward risk and so on. So a perfectly solid strategy, nothing wrong with this. And in fact, this is better than average, better than what most people do. But see what actually happens. So let's say, as I said, you are taking trades into support and into resistance. So you have done your analysis, you get confirmation, and you sell into resistance. You have a winner. Again, sell into resistance. Nice one. But look what happens. So this is fantastic. You make money. Look what happens though. Here, it moves into resistance, and this time it fails. So you say, okay, this is part of the game. Let me continue. You sell into resistance, or you buy at support. And here it fails again. You think, never mind, I will catch the next one. My point is, though, that if I zoom out, look what is happening. You are selling into an uptrend. And even if your strategy says sell into resistance, there is a situation where, of course, you will take some losses, and maybe you will have 2 or 3 losses in a row because you have done your analysis, you do wish to sell into resistance, but this time it doesn't work, and it is normal and healthy, I can say, that you take some losses in a row. You have normal losing trades. This is completely normal statistically. Every real strategy has drawdowns, but this is the moment where the strategy stops being the problem and the trader's psychology becomes the problem. Because what do you think? Oh, the next one should win. I had 3 losses in a row. I must make it back. So what do? You increase the lot size. But in a prop challenge, this is dangerous because daily drawdown limits are tight, and one emotional trade can end the account. So the strategy didn't fail. Risk discipline failed. So notice here, you do wish to sell into resistance, but once you zoom out a little bit, you see that the trend has changed. You need to be careful. You decided to sell, let's say here, but where are we? What is the structure of the market? We are in an uptrend. You must buy pullbacks. Don't try to sell tops every single time. Where is your reward? What is the risk you are assuming when you are taking these trades? What happens especially if you wish to recover previous losses and you increase your position size? So even if suddenly the trade becomes invalid, the trader enters anyway because you want to recover faster. So this is extremely common in challenges. And again, this is not a strategy problem, this is a patience problem. So let's say you end up here, you do your analysis, you look at the global macro, and again, do you see here that price action is moving horizontally? From moving upwards, from the slope pointing upwards, we move horizontally, and you see resistance, down, resistance, second time, 3 times. Now you are hesitating. You are hesitating because you had losses. And guess what? This time, your strategy works. And we have this big move to the downside. So why is this happening? Because you are emotionally damaged by previous losses. So instead of letting your trade play out, you are hesitating. You are developing a fear of pulling the trigger. But something else might happen. Instead of going for your usual 2-to-1, because of your previous losses, as I said, you are damaged emotionally and you are going for half the reward. So you think, I will sell here, place my stop outside the trend line. Oh, here is the trend line. Let me take some quick profits. And you are going for half your reward. And then what happens? It goes 2 times, 3 times your reward. So do you see what happens here? It's not the strategy's fault. It is your fault because you are emotionally damaged. I can tell you that a decent strategy is easy to find. Consistent execution is rare. So the challenge is designed to expose impatience, revenge trading, emotional sizing, and rule breaking under pressure. In other words, prop firms are testing psychological stability disguised as trading. Let me give you another example. As you can see here, I have supports, I have resistances, I have VWAP, I have volume profile. So let's say you have a perfectly sound strategy and you have solid rules and you are going for proper reward risk trades. And again, this is better structure than most traders. But here's the key question. Would this strategy pass a prop challenge? If you execute consistently, yes. If you are emotionally damaged, if you are not emotionally stable, no, you will fail even with a sound strategy. Because the failure point is not the indicator. It is discipline under drawdown. Let's discuss the mathematics. So let's say you go for 2-to-1, you have a 50-60% success rate, which is very profitable in the long term. But let's say now you add one emotional mistake. 3% revenge trade or breaking daily drawdown. That single moment, if you go for a 4% revenge trade, so let's say you are buying here at support and instead of taking the stop loss, you say, oh, it should come back and you take a 4% revenge trade. Or you are breaking your daily drawdown limits because you are upset. That's it. You are erasing weeks of discipline and you instantly fail the challenge. So the real enemy is not probability, it is behavior spikes. So this is something you must pay attention. This is how you should trade as a professional, and please pay attention. Professional funded traders think differently. They don't say, how fast can I pass? They ask, how do I make failure mathematically difficult? So the focus is on small fixed risk, fewer trades, calm execution, survival first, profits second, because once survival is stable, passing becomes a byproduct. So as my final thoughts, why the real reason traders fail, this is it. Because they change risk under pressure, because they overtrade after losses, because they cut winners emotionally, and then they break rules when it matters the most. So your strategy isn't the weak point, emotional consistency is. And the traders who understand this are usually the ones who get funded and stay funded. If this helped you see prop challenges differently, let me know in the comments. Thank you for watching. This is Fotis Papatheophanous from TTT Markets. See you in the next video.